This week in the world of Broadcom, the headlines were dominated by a major push into next-generation enterprise networking. But while the company unveiled new technology targeting the AI boom, its stock price has been telling a different story, continuing a recent pullback from its highs. This divergence raises a key question for investors. With some of the world's biggest tech companies announcing historic spending plans that directly benefit Broadcom, why has the stock been under pressure? Is this a temporary disconnect or a signal of deeper concerns? Welcome to TickerWatch News for Broadcom, Week 7, 2026. In this episode, we're breaking down this week's news and developments for Broadcom, a company at the center of the artificial intelligence infrastructure buildout. We'll cover major product launches, explosive AI revenue forecasts, and what some of the world's biggest names are saying about the stock. It was a volatile week for Broadcom's stock, reflecting broader shakiness in the technology sector. After closing the previous week around $331, the stock saw significant swings. It dipped as low as $308 early in the week amid concerns over export licenses and market-wide tech pressure. However, it rebounded strongly, closing the week up near $333 per share. This represents a weekly gain of less than 1%, but it masks the intra-week turbulence. The Nasdaq index also experienced a roller coaster week, with a sharp sell-off followed by a strong rebound. This suggests Broadcom's price action was heavily influenced by the broader market's tug-of-war between fear and greed in the tech sector. The key takeaway is that despite a powerful fundamental story, the stock's recent performance has been choppy and tied to overall market sentiment. The biggest story for Broadcom this past week was its expansion into next-generation enterprise networking, with the launch of the industry's first Wi-Fi 8 enterprise platform. This new solution includes access points and switches designed for AI-ready networks. The platform is built to handle the increasing demands of hybrid work, real-time AI applications, and the massive amounts of data generated by connected devices. By integrating security, analytics, and AI acceleration directly into the hardware, Broadcom is positioning itself as a key supplier for enterprises upgrading their infrastructure for the AI era. Fueling this strategy is the massive capital expenditure planned by Broadcom's largest customers. This week, reports highlighted that spending plans from hyperscalers like Google and Amazon are soaring. Google guided for up to $185 billion in capital spending for 2026, nearly double its 2025 figure. Amazon announced plans to spend around $200 billion. A significant portion of this spending is expected to flow to Broadcom, which is a critical partner for Google's Custom Tensor Processing Unit, or TPU, program. This spending surge reinforces the demand for Broadcom's custom AI accelerators and high-speed networking chips. This demand is reflected in Broadcom's own financial projections. The company's AI revenue has been accelerating dramatically. Reports this week reiterated that in its most recent quarter, AI revenue grew 74% year-over-year. Looking ahead, the company projects that AI revenue will double in the first quarter of 2026 to reach $8.2 billion. The company's total AI-related order backlog now sits at over $73 billion. Finally, some headwinds were also noted. Uncertainty has increased regarding the timeline for U.S. government approval of export licenses for high-end AI chips to China. This review on national security grounds has reportedly caused some Chinese customers to delay orders, creating a point of concern for major semiconductor exporters. Wall Street analysts have been overwhelmingly bullish on Broadcom, with many reiterating their positive outlooks this week. Jefferies maintained its buy rating and a $500 price target, citing confidence in its AI and networking position. Wolfe Research upgraded the stock to outperform with a $400 target, pointing to the powerful demand from Google's TPU program.
Bank of America also listed Broadcom as a top compute stock. However, not all analysts were in lockstep. David and Davidson initiated coverage with a neutral rating and a $335 price target, arguing the company's AI exposure doesn't warrant a premium multiple compared to market leaders. On the institutional side, notable investors have been taking positions. Fillings revealed that Soros Fund Management initiated a new position worth approximately $35 million in the fourth quarter. Cathie Wood's ARK investment also made a significant purchase, investing around $27 million into the company. The overall news narrative appears to be one of strong fundamental performance clashing with recent market volatility. The tone from analysts is largely bullish, viewing the recent stock pullback as a buying opportunity, or a gift, as one analyst put it. The sentiment is that while the stock price has been shaky, the underlying business momentum, driven by AI, is stronger than ever. From a technical perspective, Broadcom's stock has been under pressure recently. It has pulled back more than 20% from its 52-week high set in December 2025. During the recent selling, reports noted the stock tested its 200-day moving average, a key technical level, where buyers appeared to step in, suggesting a potential level of support. Fundamentally, the conversation is centered on powerful growth versus valuation. Broadcom's AI business is booming, with revenue expected to double in the current quarter, and it has a massive backlog of over $73 billion in AI-related orders. It is a direct beneficiary of the AI infrastructure buildout by the world's largest tech firms. However, this growth has come with questions about valuation and margins. Some analysts see the stock as attractively priced given its growth, with forward price-to-earnings multiples cited in the range of 21 to 36. Others point out that the stock is trading at a premium, with one report flagging it as potentially overvalued. Management has also guided that gross margins may compress slightly as lower-margin AI systems become a larger part of the revenue mix, though they expect total profit dollars to continue growing. Looking ahead, the most significant upcoming catalyst for Broadcom is its next earnings release, which is expected on March 4, 2026. Investors will be watching closely for updates on AI revenue, the size of the order backlog, and further commentary on the integration of VMware. Beyond earnings, market watchers will continue to monitor capital spending announcements from other major technology companies, as these are direct indicators of future demand for Broadcom's products. Any new developments on U.S. export policies towards China will be a key factor. From a price perspective, the key level to watch is whether the stock can hold above the 200-day moving average, which recently acted as support. A bull case scenario sees continued execution on AI demand and a stabilization in the tech market, allowing the stock to rally towards higher analyst price targets. The bear case would involve a broader market downturn, increased competition, or a more significant impact from geopolitical tensions. The base case suggests continued volatility in the near term, with the company's strong AI-driven fundamentals providing a solid foundation for the long term. Thank you for tuning in to TickerWatch. The information provided in this podcast is for educational and informational purposes only and does not constitute financial advice. We encourage you to subscribe to the podcast, leave a review, and share this episode with anyone interested in the latest developments in the semiconductor industry. Join us next week for another deep dive into the companies shaping our world.